Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate finance and help you understand what is really going on behind those big company announcements. Today on the docket we have iPower Incorporated, and let's just say they've been busy securing some immediate financial lifelines. Consider this filing a peek under the hood at how they're managing their short-term cash crunch. Before we dive into the nitty-gritty, if you are enjoying these plain English breakdowns of financial reports, do us a favor and hit that subscribe button. And if you want to chat about these reports or get more insights, join our Discord community. The link is in the description below. So what we're looking at today is a Form 8K filing. Think of an 8K as an or big news report that companies have to file with the SEC, the Securities and Exchange Commission. Whenever something significant happens that investors should know about, it is not a regular report like a quarterly or annual one, but rather an immediate notification of important events. This particular 8K is from iPower Incorporated, a company that is involved in the solar energy sector. If you are not familiar with them, they are primarily known for selling solar energy products and related services, and they've been in the news before for various business developments. Today's filing is all about how they're managing their immediate financial needs, which is always a crucial aspect of understanding any company's health. The important date here for this report is the 24th of November, 2025. This is when the events we're discussing actually took place. This section tells us about a new important contract or agreement the company has entered into. It is often one of the most significant parts of an 8K. What iPower did on the 24th of November 2025 was issue something called promissory notes. You can think of these as IOC, essentially loans that the company is taking out. They issued 3 of these notes for a total of $2 million and in return, they received $2 million in cash. This is like them borrowing money to keep the lights on or fund their operations. The key thing to understand about these notes is the terms they carry an interest rate of 6.5% per year. That means for every year the loan is outstanding, iPower has to pay 6.5% of the borrowed amount as interest on top of the original amount. Now here is the really interesting part about repayment. These notes are due very soon. They need to be paid back by the earliest of 2 dates. The first is within 60 days. That is pretty short. It means they have about 2 months to come up with the money. The second condition for repayment is sooner if the company manages to secure new financing arrangements. This suggests that these notes are a temporary bridge, meant to get them over a short period until they can get more substantial funding. So, where did this $2 million go? The filing clearly states that this fresh cash was used to pay off existing loans that iPower had with JPM Chase Bank. These weren't just any loans, but loans under a credit agreement that was originally signed back in November of 2021 and has been modified since. This tells us that iPower was carrying debt with JPM again, and this new borrowing from investors and related parties is essentially refinancing or clearing that immediate obligation with the bank. We also learn who these notes were issued to. They were issued to certain investors and related parties. And this includes an entity that is controlled by iPower's very own Chief Executive Officer, Chen-Long Tan. When the boss's own entity is lending money to the company, it often signals a need for immediate cash and can sometimes raise questions about executive compensation or related party transactions. Though it can also be a sign of confidence from leadership, they've attached a form of the promissory note as an exhibit to this filing. This is the actual document that outlines the loan terms. While we can't go into every legal detail here, the crucial takeaway is that this is about short-term financing. Companies often use these types of short-term notes or bridge loans when they need cash quickly. Perhaps to cover operating expenses, meet payroll, or refinance existing debt, especially if they are in the process of securing a larger, more long-term funding round. Now let us look at the bigger picture here. iPower is a company that has been navigating the competitive and capital-intensive solar industry. Such companies often require significant funding for projects, inventory and growth. The fact that they are issuing promissory notes even to related parties and using the funds to pay off bank debt suggests a few things. Firstly, it indicates that their cash flow or access to traditional bank financing might be under some pressure in the short term. It highlights the importance of these related party transactions. While common, they do come with scrutiny. The 6.5% interest rate, while not astronomically high, certainly adds to the cost of capital for the company, and the extremely short repayment window of 60 days or upon securing new financing means that the clock is ticking. iPower needs to either find more money, likely from new investors or a more substantial loan, or have a very clear plan to generate enough cash to repay these notes very soon. Sometimes these short-term financing deals are precursors to significant company events, like a major acquisition, a large project commitment, or even a restructuring. The fact that they pay off existing bank debt is a positive in that it suggests they are trying to maintain good relationships with traditional lenders like JP Morgan, but it also means they are not able to get the necessary funds from them directly at this moment for whatever reason. Thinking like Warren Buffett, we'd want to understand the underlying business. Is iPower's core operations strong enough to generate the cash needed for repayment, or are they reliant on these ongoing injections of capital? The solar industry itself can be cyclical, influenced by government policies, technological advancements, and competitive pressures. A company like iPower needs to demonstrate not just an ability to secure funding, but a sustainable business model that can generate profits over the long term. These promissory notes are a bandage, not a cure, for any deeper financial challenges. The real test will be how they manage the next 60 days and whether they can secure that promised new financing without taking on even more unfavorable terms. Let's touch on their stock. iPower Incorporated's common stock trades on the Nasdaq stock market under the ticker symbol IPW. This means it is a publicly traded company, and these filings are for the benefit of public investors. The fact that they are issuing debt and seeking financing in this manner can put pressure on the stock price. Investors will be watching closely to see how the company manages its liquidity and debt obligations. Interestingly, iPower is classified as an emerging growth company. This means they benefit from certain relaxed regulatory requirements, including potentially extended timelines for adopting new accounting standards. This can sometimes make their financial reports a bit simpler to analyze compared to larger, more established companies that have to adhere to stricter, more complex accounting rules. However, it also means investors need to be aware that some of their disclosures might not be as comprehensive as those from non-emerging growth companies. This section typically lists all the documents or exhibits that are being filed along with the main report. It is like an attachment list. As we mentioned, Exhibit 10.1 is the form of the promissory note. They've also noted that portions of this exhibit have been omitted due to confidentiality. This is fairly standard practice, especially when specific details that could reveal sensitive business information, like exact names of all investors or specific terms that are not material to the general understanding of the agreement, are involved. And Exhibit 104 is the cover page interactive data file. This is essentially the information from the front page of the report, but in a format that computers can read easily, which helps with data analysis and accessibility of the filings. So, what is the story here? iPower Inc. urgently needed cash and secured it through short-term promissory notes, totaling $2 million. This money was used to pay off existing bank debt. A significant portion of this funding came from parties related to the company, including an entity controlled by the CEO. The repayment for these notes is due very quickly, either within 60 days or sooner if new financing is found. This filing is a clear indicator that iPower is in a cash tight situation and is relying on immediate and potentially costly short-term financing to manage its obligations. The focus now shifts to their ability to secure more substantial, long-term funding in the very near future to avoid default on these notes. Without that, they could face serious liquidity problems. The company's strategic direction will heavily depend on their success in securing this future financing and whether their core business can generate enough revenue to support their operations and pay back their debts. Now, looking at these numbers and the situation more broadly, iPower Inc. appears to be in a precarious short-term financial position. They are making timely payments to their bank, which is good, but they are doing it by taking on new debt with a quick turnaround. The 6.5% interest rate is a cost they are willing to bear to maintain operational continuity. The main risk here is their reliance on finding new financing. If they cannot secure that within the next 60 days, they will have a significant problem meeting these obligations. An opportunity exists if they can leverage this bridge financing into a larger strategic investment that can truly propel their business forward. For now, it is a situation that requires very close monitoring by investors, focusing on their cash burn rate and their progress in securing that crucial next round of funding. Alright, that is our breakdown of iPower Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they will secure new financing in time? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord community in the description to join the conversation. Thanks for watching. See you next time.